Ford is currently facing a significant crisis in the EV market. The CEO, Jim Farley, has taken a drastic step by shutting down EV production, sending a stern warning to the entire auto industry. This decision comes in response to a massive consumer backlash, as most customers are strongly rejecting Ford's EV offerings. The company is grappling with low demand, leading them to sell their EVs at substantial losses and resulting in layoffs of EV production workers. As a stark illustration of this crisis, around 92,000 unsold Ford electric cars have accumulated at dealer lots, and Ford is experiencing losses of a staggering $4.5 billion in just a single year. This situation is nothing short of catastrophic and is expected to have a ripple effect on the entire car industry. CEO Jim Farley's response to this dire situation has been to shift Ford's focus away from EVs and double down on what many consumers still favor: affordable combustion engine cars. Simultaneously, the decision was made to cease the production of their flagship EVs. So why consumers are rejecting EVs, prompting Ford's dramatic shift in strategy? What did Ford realize that prompted them to shut down EV production and invest billions of dollars into gas-powered vehicles? Let's find out. The F-150 Lightning, once Ford's flagship pickup, is now facing an uncertain fate. Ford has made a surprising decision to halt the production shift for the F-150 Lightning, and this has sent shockwaves throughout the automotive industry. While Ford has provided various reasons for this shift, the underlying problem appears to be low demand. Ford's shift towards positioning itself as a luxury car maker with higher pricing has seemingly backfired, resulting in the dire situation it now faces. Just how bad is it? The situation is dire to the tune of approximately $4.5 billion. Delving deeper into the numbers reveals a truly alarming picture. In the third quarter of 2023 alone, sales of the F-150 Lightning plummeted by a staggering 46%. This downward trend is not unique to Ford, as the entire EV industry is grappling with similar challenges. While production increased by 350% in 2023, it led to a haunting sight of around 92,000 unsold EVs sitting in dealership showrooms across the country. On average, it takes 92 days to sell an EV, compared to the 40-day average for combustion engine counterparts. Many dealers are reluctant to carry EVs on their lots. In a desperate effort to boost demand, Ford took the drastic step of slashing prices on its 2023 F-150 Lightning model, offering substantial incentives and leveraging federal tax cuts. Despite these measures, even with up to $115,000 off the sticker price, it's evident that the Lightning's appeal is diminishing. But why is Ford facing this crisis? Analyst Garrett Nelson from CFRA pointed out a significant disconnect between what automakers like Ford are trying to sell and what consumers are genuinely interested in buying. EVs, given the current charging infrastructure and range concerns, are not yet practical for many consumers. Additionally, EVs often come with higher price tags. This situation is not only detrimental to Ford, but also to its EV workforce, as Ford has been announcing substantial job cuts and layoffs, including the layoff of nearly 700 workers involved in building the Lightning. Despite selling their EVs at a loss, Ford appears determined to maintain a startup image and downplay their significant losses. Darren Palmer, Ford's vice president, recently tried to downplay concerns by stating that it's a bit premature to worry about EVs accumulating in dealer lots. He insisted that there's still good demand. However, the numbers tell a different story. Ford's EV sales declined in the second quarter, and reports indicate that Ford is bracing for a massive $4.5 billion loss in their EV division this year, on top of a substantial $2.1 billion loss last year. The challenges facing Ford in the transition to EVs can be attributed to several key factors. Firstly, high investment costs are a significant barrier. Shifting from internal combustion engines to EVs necessitates substantial investments in research, development, manufacturing infrastructure, and worker training. This commitment is evident in Ford's plan to construct the $3.5 billion battery factory in Michigan, reflecting their dedication to American manufacturing, including paying competitive wages to workers while still benefiting from government tax incentives. The second factor is Ford's pricing strategy. In an attempt to expand its market share and compete with rivals, Ford announced a reduction in the price of its electric F-150 Lightning pickup truck. This price reduction was made possible by the decreasing cost of raw battery materials. While this strategy may prove profitable in the long term, it can result in short-term financial challenges. Additionally, Ford dealers have been marking up their vehicles substantially, which is cutting into profits, with markups as high as $5,000 to $8,000 on each EV sold. Establishing a strong presence in the EV market is essential for long-term sustainability. CFO John Lawler acknowledged that startups in the EV sector often experience losses as they expand their capabilities and market share. As a legacy automaker, Ford may be leveraging its established reputation while absorbing these losses as it innovates. However, the long-term success of the company may be challenging if EVs don't sell well, as brand image alone may not be sufficient for survival. Amid the shift towards EVs, Ford has recognized that there is still a robust demand for gas-powered vehicles. Ford CEO Jim Farley has discussed the ongoing debate between electric and gas cars and announced a collaboration with Albemarle Energy Storage to provide lithium hydroxide for batteries. Their goal is to support the production of 3 million EVs between 2026 and 2030. However, Ford remains committed to their traditional internal combustion vehicles. Ford's division, dedicated to internal combustion engines and hybrid models, Ford Blue, has ambitious plans for growth. Ford Blue President Kumar Gupta revealed intentions to increase the production of these models by 160,000 vehicles within the next 10 months. In a parallel approach, GM has also reaffirmed its commitment to internal combustion engine vehicles alongside its increasing investments in EVs. GM has announced an investment of over $2 billion this year in new full-size trucks, SUVs, and a new generation of V8 engines. Ford has implemented structural changes, introducing Ford Blue for internal combustion and hybrid models, and Model E for EVs exclusively. This separation acknowledges the ongoing importance of combustion engines in the U.S. market, especially for larger vehicles like trucks and SUVs. Ford recognizes that while EVs represent the future, the current market reality still supports the production and development of gas and diesel vehicles due to their profitability. Despite challenges in EV adoption, the idea of banning internal combustion engine IC vehicles and mandating a rapid shift to electric vehicles has sparked significant debate among industry stakeholders, policymakers, and the general public. Ford's top executives emphasize that IC engines are far from obsolete. Ford USA's vice president stated that propulsion isn't going to be as binary as folks thought, highlighting the variety of propulsion systems between pure IC and pure EV. Ford's ranking as the third-largest hybrid sales provider behind Toyota and Honda indicates substantial market demand for hybrid vehicles. Simplifying vehicle production by reducing the number of variants, as demonstrated by Ford's decision to streamline the F-150's variants, can enhance manufacturing efficiency, improve quality, reduce cycle time, and lower costs. Banning IC engines could disrupt these efficiency gains if it pushes companies to produce a wide array of EV variations without proper supply chain adjustments. The shift to EVs may introduce new supply chain challenges, especially in sourcing EV-specific components, many of which come from China. This could present risks associated with dependence on a single country for critical components. Other automotive industry leaders share similar concerns. The CEO of Jeep warned against banning IC engines by 2035, expressing worries about the affordability of electric vehicles and the potential exclusion of the middle class from vehicle ownership. CEOs of BMW and Mercedes also view such a ban as a mistake and are exploring alternative technologies like hydrogen and ammonia fuel cells to reduce prices and expand consumer choice. Ford's strong belief is that IC engines will remain relevant, and they will focus on internal combustion engines combined with hybrid powertrains. Upcoming models, such as the Maverick, Ranger, and Explorer Hybrid, will feature stronger hybrid systems and updates. With Ford's decision to halt EV production, including the suspension of the F-150 Lightning, the automotive industry faces significant uncertainty. Ford's ambitious electric endeavors are encountering challenges. But the question remains whether Ford can adapt to meet customer demands. The main concern is whether the shift to electric vehicles has occurred prematurely, and Ford's approach, spearheaded by Jim Farley, goes against industry trends. Only time will reveal the ultimate outcome for Ford in this evolving landscape. Do you think combustion engines should be banned, and are EVs a scam? Let us know in the comments below. If you enjoyed watching this video, please be sure to give it a thumbs up and subscribe for more content. Thanks for watching.